I will be starting off by explaining what is the executive summary for all of the studies that we have done. We start off with Bank of America, which we know that they are offering diverse deposit and loan options to cater to the unique customers and businesses, included trade finance, equipment financing, business loans, and commercial real estate loans. Bank of America also have a strong reputation and brand, which is a market leader with 69 million plus clients, extensive network of branches, ATMs, and a website for nearly 46 million of active users. So in our studies, we are trying to analyzing the focus Bank of America offers, which are the four types of deposits and loans. Also, we are analyzing their statement of financial position through Camel framework analysis for the past 3 years. So I will be explaining a bit introduction about the Bank of America. So on the left side is the founder of the Bank of America, which is Anadeo Pietro Giannini in 1904. So the bottom of the picture is where all of the different small banks emerges into one bank, which is the Bank of America. And the most bottom picture is what we can see the building of Bank of America in 1904. So they have been formed together, which they merges with different small banks in 1998 through a merger, and it is the third largest US bank with a 4,200 plus outlets across 21 states. So it leads on and focus on deposit market share in key states and operates in 4 sectors. There are many branches. ATMs have already been done in 2020, and they are focusing on sustainable financial income in 2035. Next, we will be talking about the 4 types of deposit that have been offered by Bank of America. First, we start off with savings account, which is categorized as the other deposit and provided by developing financial institutions, such as savings institution as well as commercial banks. Next is current account, which allows money to be actively credited and debited in typically used for working capital, that is for paying suppliers, paying employees' wages, paying off debt, and using trade financial abilities. The third is the fixed deposit account, which is the products that is offered by financial institutions for the placement of funds by a customer for a specific period of time. And the final types of deposit is the negotiation certificate of deposit. So it is a certificate of deposit which a minimum face value of $100,000 and NCID have a face value of $1 million or more. So next we will be comparing the savings account and the current account, which we start off with savings accounts benefit. So they are different in benefits. The savings account benefit is they have been accessed with card by ATM, internet banking, and to bank in cash or checks. However, if we take a look on the benefits for current account, it is convenient for daily transactions and payments, check writing capability, few banks offers interest but at high deposit minimum 1,000 ringgit. So now we will be explaining the features for savings account. So it is easy to access the funds, it can secure deposit for daily needs, and conventional savings offer tiny interest. Now we go back to the features for the current account, which is we have been talked before the ATM access with card. It is also have the checkbook facility, and they will be given the monthly statement to the customer. So there are relevant rates for the savings account, which is the interest rate is usually 0.25%. ATM withdrawal fee is 50 cents until 1 ringgit, and the minimum deposit will be 250 ringgit until 1,000 ringgit. So now we go back for the relevant rate for the current account. The interest rate will be always starting at 0%. The ATM withdrawal fee is the same as the savings account, and the minimum deposit for the current account is from 1 ringgit to 1,000 ringgit. Next, we will be comparing the fixed deposit accounts and negotiable certificate of deposits. So fixed deposit accounts, which has short term as FD, they have benefits like higher interest rates than a normal savings account. It has minimal to no risk to the investor and protected from interest rate fluctuations in the future. However, if we take a look on the benefits for the NCID, which is a short form for the Negotiable Certificate of Deposits, it is considered as an investment, offers more liquidity, and provide greater interest. And we will be looking for the features in the FD, which is the fixed deposit. So the fixed they have been the fixed terms, which is 1 to 5 years or even shorter options of terms. It will be earn fixed returns for individuals and businesses. It will also lock in until maturity and interest paid at the maturity date. However, the features for the NCID, it issued in domination greater than $100,000. NCID maturity is flexible from weeks. NCID will be matured, flexible from weeks to a year, which is mostly 3 until 6 months. And the features for the NCID is higher returns than the savings account, we have been discussed before. So NCID will be rate set by the market value. So we will be explaining the relevant rates for the FD, which is the FD interest rate is from 1.5% to 2.1%. The ATM withdrawal fee also the same 50% until 50 cents until 1 ringgit, and the minimum deposit starts off 1,000 ringgit until 10,000 ringgit. So the relevant rates for the NCID, the entry point is the $1,000, which is higher than the FD. The variety of maturities will be starts of 7 until 37 months. These terms and deposit minimum amount is actually offered by the Bank of America. And the early withdrawal from NCID will be they have been having the penalty for the early withdrawal in the NCID, which means losing 90 until 180 days, and they will be given 7 days grace period to withdraw the NCID. Next, we will move on to the next presenter. Thank you.
There are 4 types of financing that are offered by the Bank of America Malaysia Berhad, which is personal loan, mortgage loan, education loan, and business loan. For the personal loan is the loan for personal use and unsecured loan that made to an individual through a financial institution such as a credit union or bank for the personal purpose. While the mortgage loan is the often known as the properties backup loan is a type of loan in which a person loans money by pledging the value property as the collateral. The next one is education loan. Education loan, also known as the student loan or education financing, a financial product designed to help individual finance their education related expenses. The next one is business loan. Business loan, there are several sorts of business loan, including the term loans, which are typical loan with a set payback period and fixed installment. Personal loan from the Bank of America Malaysia Berhad can make the financial journey of its customer grateful. Customer can enjoy the freedom to use the fund as they see fit, whether for the debt consolidation, home improvement, medical bills, or personal needs. Online application by the bank has also made it easier, eliminating the needs for the customer to come to the bank physically. In addition, the benefit of fixed interest rate as well as ensuring predictable monthly payment in a flexible repayment period of 12 to 16 months have been provided by the Bank of America Malaysia Berhad. With no collateral required, size control of your financial goal, Bank of America Malaysia Berhad is your trusted partner in personal finance solution. Bank of America Malaysia Berhad also provided the mortgage loan to the customer to enjoy the benefit of long-term financing with flexible repayment period spanning 15 to 30 years. They can choose between fixed or variable interest rate that are tailored to the customer financial preference. As homeowners, customer may be eligible for a tax deduction on mortgage interest payment. With the consistent monthly payment, the bank fixed rate mortgage will make budgeting and financial planning easier. Realize the joy of home ownership with a Bank of America Malaysia Berhad mortgage loan. Bank of America Malaysia Berhad also offer the educational loan tailored to support the academic endeavour of customer. It can cover tuition, books, living expenses, and even essential equipment such as laptop. Bank loan provide flexibility with a choice of fixed or variable interest rate, ensuring that customer can focus on their study without any worries about finance. Benefit from competitive interest rate based on the creditworthiness of customer. Enjoy a grace period after graduation for starting repayment. Bank of America Malaysia Berhad committed to making education financially accessible to its customers. Bank of America Malaysia Berhad stand as your partner in business growth, offering a variety of loan options tailored to your needs, from term loan, for long-term investment to business line of credit with flexible repayment. We empower businesses of all sizes. Our online application process ensure accessibility, make it convenient for business owner. With competitive interest rate and a range of options, Bank of America Malaysia Berhad is committed to supporting the customer business success, secure the funding, units and thrive with the Bank of America Malaysia Berhad.
Under capital adequacy, there are two types of ratio that will be discussed. The first one is risk-weighted capital ratio, and the second one is core capital ratio. Let's look at the first one, risk-weighted capital ratio. Based on the figure, it shows that there is an increase of 30.05% from 2020 to 2021, which implies that the bank's capital adequacy compared to its risk-weighted asset grew during this time period. The growth is because of capital injection, increasing profitability, and some risk management. However, in 2022, the value dropped, reflecting a reduction in capital adequacy relative to its risk-weighted assets. This could be due to factors such as increased risk exposure, higher risk-weighted asset, or decrease in regulatory capital. Next is core capital ratio. It was found that there is a significant increase from 2020 to 2021, where this improvement might due to increased profit, capital injections, or other positive financial development. But in 2022, there is a decrease of 22.16%, which indicates a relative decline in capital adequacy. This could be attributed to factors such as increased risk exposure, loan losses, or a change in the regulatory environment, affecting the calculation of the ratio. So, it is advised for the bank to keep improving their core capital ratio because it is a key indicator used by regulators and investors to assess a bank's ability to withstand financial stress and cover potential losses. Non-performing loan or NPL is a key component in assessing the overall asset quality of a bank. In context of banking and finance, the lower the NPL, the better asset quality of a bank will be. For this bank, the NPL amount has consistently decreased during the time period, indicating an improvement in managing non-performing loans. This means that a significant portion of the loan has been repaid. Loan to deposit is a financial metric used in the banking and finance to assess the relationship between a bank's loan and its deposit. In this case, it was found that the ratio significantly increased in 2021, which is 11.79%, indicating higher lending relative to deposit, and slightly decreased in 2022, which is 2.97%. An increase in the LDR may be because of the bank is extending more loans to borrowers.
For the graph of deposit to shareholder fund in 2020, this proportion stood at 4.53%, showing a modest beginning. However, a significant uptake is observed in 2021, with the percentage escalating to 6.80%, and a further surge is evident in 2022, reaching 8.82%. This consistent growth suggests a deliberate shift or an evolving strategies by the institution in sourcing and managing its funds. Several factors could contribute to this observed trend. Firstly, the institution may have actively sought to attract deposits from shareholders as a means of bolstering its capital base. Shareholder funds, in the form of deposits, represent a stable and long-term source of financing, providing the institution with increased flexibility in undertaking various financial activities. These strategies align with the nation of engaging its stakeholders in the institution's success and growth. For the graph of administrative expenses to total expenditure, in 2020, the proportion stood at 0.0021%, signifying a baseline for comparison. A remarkable reduction is evident in 2021, with the percentage plummeting to 0.0003%. However, there appears to be a slight uptick in 2022, with the percentage rising to 0.0014%. The drastic decrease from 2020 to 2021 raises question about the factor contributing to such a significant reduction to administrative expenses relative to total expenditure. Several plausible explanations will account for this sharp decline. The organization might have implemented cost-cutting measures, streamlined operational processes, or experienced a reduction in administrative overhead. For the graph of return on asset ROA, in 2020, the ROA percentage stood at 0.017%, indicating a modest return on organization asset. However, a significant decline is evident in 2021, with the ROA dropping to 0.005%. This substantial decrease prompts a closer explanation of factors influencing the organization's profitability and asset utilization during this period. The decline in ROA from 2020 to 2021 may be attributed to various internal and external factors.
For the graph of return on equity (ROE), in 2020, the ROE percentage stood at 0.103%, indicating a relatively robust return on shareholder equity. However, a considerable decline is evident in 2021, with the ROE dropping to 0.038%. This substantial decrease prompts a closer examination of factors influencing the organization's profitability and its capacity to generate return for shareholders during this period. Internally, the decline in ROE from 2020 to 2021 may be attributed to various factors. Operational inefficiency, increased costs, or changes in the business model could have impacted the organization's ability to generate earnings relative to shareholder equity.
In 2020, the bank was efficient in making around 32 million ringgit in net interest income. This shows the bank's efficiently earned income from interest-bearing assets, balancing interest income and expenses. An improvement was seen in 2021, reaching around 41 million ringgit in net interest income. The bank saw improved profitability, earning more interest activities after covering interest obligations. The highest net interest income of around 180 million ringgit in 2022 indicates a strong performance. The bank achieved its highest profitability, ensuring long-term sustainability and financial strength. In 2020, the spread was 0.65%. This means the bank earned 0.65% more from its loans and investments compared to what is paid for the funds. It reflects how well they managed the difference in interest rates during that time. In 2021, the spread increased slightly to 0.66%. Even though it's a small change, it is a positive sign. It shows the bank made efforts to keep or improve its efficiency in managing the difference between what it earns and what it costs, even with external treasures. In 2022, there was a significant increase with a spread of 1.04%. This big jump made the bank change how it deals with the risk, the type of assets it works with, of adjusted interest rates. It can be seen as a success in increasing the net interest income, which is like the profit they make from their banking activities. In 2020, the ratio was 5.59%. This means the bank invested a lot of its money in giving loans. It is like saying they were actively helping customers who need more money. But in 2021, the ratio dropped to 4.56%. It is like the bank decided to be a bit more careful and didn't give out as many loans. Maybe they were worried about the economy, so they took steps to reduce the risk of people not be able to pay back the loans. In 2022, it went up a bit to 4.71%. This could be the bank found a good balance. They are lending enough to help with growth but not too much to take on too much risk. It may be because the economy is getting better and the bank wants to make sure it's helping customers while also managing risks. In 2020, around 60.1% of the bank's money could be quickly turned into cash, means the bank is ready to handle its money well in different situations. In 2021, it went up to 67.01%. This is a big increase. The bank made smart move to have even more money ready, maybe by managing its cash better and being efficient with its assets. In 2022, it went down a bit to 74.40%, but it's still high. The bank is keeping a lot of cash, which is like having a strong backup plan. It gives the bank extra strength against the risk of not having enough money when it's needed. In SSC Bank of America Malaysia Berhad through the Camel framework, the analysis reveals a mixed performance. While there were positive trends in assets quality and strategic stability, highlighted by reduced non-performing loans and consistent growth in shareholder funds, challenge surfaced in capital adequacy and profitability. The improvement in the risk-weight capital ratio in 2021 was offset by a significant decline in 2022, raising concerns. The declining returns on assets and equity in 2021 indicate ongoing challenges in profitability. Despite these hurdles, the bank maintained a strong liquidity positions, employing proactive measures in 2021 to ensure resilience against liquidity risks. In conclusion, strategic adjustments are imperative for sustained financial health, emphasizing the need for continuous vigilance and adaptability in the evolving financial landscape.